Hi, I'm Kalila Reynolds, and welcome to another edition of Taking Stock Live. We're bringing you all the latest business news and telling you how it will affect you and your money. Don't forget to head over to my website, KalilaReynolds.com, once this live has ended to get my newsletter straight to your inbox twice a week. Now, here's what's coming up on tonight's show, followed by What's Hot in Business. So come on, let's get this money.
VertiCast Media Group has acquired CVM TV from Michael Leachin's AIC Barbados in a recent sale. We'll hear about VertiCast's plans for CVM TV from the media group's CEO and president Oliver McIntosh. And the analysts weigh in on the latest market developments. Wigton Windfarm's results are out. How did they perform? And internationally, the S&P 500 closes at a new 2022 low, as fears swirled that a recession won't stop the Federal Reserve from raising interest rates even further. We'll discuss. But first, here's What's Hot, brought to you by JMMB Group, your best interest at heart. The Bank of Jamaica has raised interest rates to an 11-year high. The central bank announced last week that it would be increasing its policy rate by 50 basis points to 6.5%. The move is another attempt to control inflation. BOJ said while the key drivers of inflation and other economic indicators have been trending in the right direction, they are not enough to ensure that inflation is on a sustainable downward path. August's inflation rate came in at 10.2%, which is still well above the BOJ's target range of 4 to 6%. The government says that preliminary estimates place the price tag of damage from Tropical Storm Ian at $360 million and climbing. The outer bands of the storm lashed Jamaica last week, resulting in landslides, mudslides, and downed trees. The storm later wreaked havoc in Cuba, leaving the whole island without power for several days. Ian then made landfall in Florida as a dangerous Category 4 hurricane, wiping out whole communities. U.S. officials have confirmed 84 deaths and expect that number to keep rising as search and rescue efforts continue. Guyana has joined other Caribbean countries helping relieve some of the pressure at the pumps. The government announced that it is slashing the cost of gasoline at the Guyana Oil Company by 20% and diesel by 15%. The changes took effect on Sunday. The government also noted that it eliminated the 10% excise tax on gasoline and diesel in March. Excise tax is a tax on imported products that are considered consumables. Apple is reportedly scaling back plans to increase production for its new iPhone 14. According to a report from Bloomberg, Apple is abandoning plans to manufacture 6 million additional devices from the iPhone 14 product family. The move comes after an anticipated surge in demand for the new phone model failed to materialize. The company will instead stick to its original 90 million target for the second half of the year. Bloomberg also noted that demand for higher-priced iPhone 14 Pro models has been stronger than for the entry-level versions, causing at least one Apple supplier to shift production capacity from lower-priced iPhones to premium models. What's Hot was brought to you by JMMB Group, your best interest at heart. This segment of Taking Stock is brought to you by Bulwark Insurance Agency, insurance made easy.
Welcome back, everybody. Let's start out by shouting out our viewers and let's see where you're joining us from. Of course, you just drop us a line in the chat. Let me know where you're joining us from this evening. So let's see who we have here so far. Richard was the first person to comment this evening, and Richard was stalking us from 7:26 p.m. The show starts at 8 o'clock. So Richard, you're well early, but I am happy for it. I'm happy to see you online and waiting for the show to start. Raquel says, good evening, money makers. Let's get this money. Levar, as usual, checking in from Mandeville. Kish, as usual, checking in from London. Dals, what's this? Daniels, I'm not sure how you pronounce this. Danai's Electrical Services saying, let's get this money as well. Jermaine joining us from Atlanta, Georgia. Maurice says, traveling home to St. Thomas from Kingston was horrendous. But I know after tuning into your show tonight, it'll be much better. Let's get this money. Lots of it too. How the roads stay? I can imagine. I mean, it was already bad because of all the construction going on. But then all this rain came, so I can imagine that road to St. Thomas right now, not in great shape. Antoinette says, late today, but I'm here. And Siobhan is checking in, hoping for any IPO. Sorry, I don't have any IPO news for you today, Siobhan Monroe, but who knows? Just watch this space. You know that we have the breaking money news and the IPO alerts as soon as they drop. Where are the rest of you joining us from? Let me know in the chat. So we're doing our show. We're flipping it today. This is a live program. And as you guys know, things change in live. Last week I had no electricity. The show must go on. And this week our guest, Oliver McIntosh, is running late. He's actually traveling. He's on the road. And he encountered some unexpected circumstances. So he's still planning to join us, but he's saying it will be like 40 minutes. So what we're going to do instead is we're going to start with the analyst segment and then flip it to Oliver once he is available. And we are really looking forward to that conversation about VertiCast's acquisition of CVM TV. If you guys didn't know, I used to work at CVM TV quite a while ago. And I also used to work for Oliver when Ollie owned Sportsmax and Scene TV. So I worked at Scene, which is the sister station to Sportsmax. So I know this situation relatively well. And when I was at CVM, the heyday of the Michael Leachin days, I think the acquisition was fairly recent. From what I understand, Leachin acquired CVM TV in 2006. I worked there from 2010 to 2012. So interesting times ahead with these acquisitions. We are all looking forward to it, and I'm greatly anticipating that conversation with Oliver McIntosh from VertiCast. And if you are a diehard fan of this show, you remember that he was on this program on Taking Stock back in March when VertiCast was just launching. And what a few months have done. What a difference a few months have made. So March, April, May, June, July, August, September, October now. 6-7 months. They have acquired the rights to the English Premier League and other prime sporting events. And now here they are with this major acquisition that we had been hearing rumors about for quite some time. And I have tons of questions about it. I'm sure you have tons of questions about it. Last week, Monday, when the news broke, you guys were on my case. You're like, I thought you were going to have the VertiCast interview, but we had already booked the show for that week. So we got right on it. We reached out to Ollie and he agreed to come on the program. And we are looking forward to that interview. But for now, we have to wait until he is available and he does want to come on. So we're going to flip the script and join the analysts for this segment. So time now for the analysts. And this segment is brought to you by JMMB, Jamaica Money Market Brokers. I'm joined by equity trader at JMMB, Clive Charlton, and also founder and CEO of Profit Jumpstarter, Keisha Bailey. Hi, Clive. Hi, Keisha.
Hi.
Hey, I was about to say morning, good evening, or night. You doing?
Boy, you're living good life, Clive. You just wake up, man.
You know?
So, good morning. And Keisha, nice to see you. We have something top secret that we're working on, right, Keisha?
See,
let's get this money, right?
Yeah, let's get it. Yeah.
Top secret. You guys soon hear about it. So, all right, before we get into our regular analyst discussion, which might be a little bit longer than usual, since we have to try to stall for Oliver to come on. You guys heard about this deal last week, like the rest of us. And if you're paying attention, a few months ago, we also had VertiCast on the program. Clive, you live here in Jamaica. Keisha's overseas. So I don't know what type of awareness you have of CVM and their impact and what they've been doing lately. What do you make of this acquisition, VertiCast buying CVM?
Well, it's interesting. I mean, these are people who are expert in the communications field, not only on the front line, meaning in front of the screen, but in the technical part of it, as well as in the financial management part of it. So I expect good to come out of it. I think we have a lot of content in Jamaica. We have quite a few cable stations. We have radio stations. I think I counted about 23 radio stations. Yeah, I started to take tab off them. You know, each time I'm driving, I just switching. And one day I decided to just get the list of them. So, I mean, we have a fairly developed communications network in Jamaica. And I think which means that there's good expertise in this area, people who can manage and own. And it's good. It augurs well. It's the second, is the one of two largest visual
free
TV
to air.
stations.
Yeah.
Free to air TV stations. So I think there's a lot of opportunity. What I have seen though floating through the social media, particularly WhatsApp, is the potential effect it will have on the what you call viewership of Premier League matches. I'm really not sure as yet what the link is, but I know that people are quite excited that they'll have more matches available. You know? So that I can tell you should be a seller in terms of viewership.
Yeah, absolutely. So, you know, sporting events are one of the major things that drive viewership, especially for free-to-air TV, because there's so much competition now. You mentioned the competitive media landscape in Jamaica with all the radio stations. You have cable, you have free-to-air, and you know, everything that's doing. But now you also have competition with Netflix and YouTube. The show is on YouTube, Hulu, Disney Plus, and all these HBO Max, all these streaming services, which is why VertiCast's business model is quite interesting, because they're coming with both. So they started out with the digital side and the streaming service, and now they're adding the traditional media. So Keisha, I don't know how closely you've been following this news, but
I followed it.
But my mind immediately went to RJR, because RJR is a publicly listed company, and it is in the television category, the primary competitor to CVM. It has much more market share than CVM. How do you think this might affect RJR? Do you think they will respond, or they should respond? Because they're not as integrated in the digital. Well, they are. They have One Spot Media. But let me hear what you think.
Yeah. So I always jump to, how can I monetize this? How can I make some money off of this news? So CVM not directly investable unless you're on the private equity side of it. But we can think then competitors, what's going to be that direct impact? Given the scale in terms of market share, RJR is much larger, but it could then mean, could RJR lose some ad revenue? Possibly, but would it be a significant amount? Probably not. But we look to also innovation coming from RJR, maybe in that sense of competition, or a spirit of competition, maybe RJR could do something in that realm. I will watch, but nothing immediate in terms of a possible trade idea, but something to watch on what RJR will do, or even possibly nationwide. Right, but that's not directly investable. But yeah.
What about nationwide now?
No, in terms of their possible move, but it's not investable. I can't do anything to make it.
No, because nationwide is radio, but it's very interesting you mentioned nationwide. Another company I have worked at for about 6 years. I was at Nationwide, and they are moving heavily into the visual space. If you notice, they have stepped up their YouTube presence significantly, to the point where last year they were nominated and they won a couple of awards from the PAJ for video content. And I remember somebody commenting, watch how the radio station win the video award, the TV award. So that's pretty interesting that you mentioned that things are changing a lot. So I'm looking forward to that conversation with Oliver. So let's move on to some other topics on the local market now. Let's start with Wigton Windfarm. A lot of people are invested in this one, and their recent results are out. So give me the highlights, Clive.
Well, Wigton is a fair company. We have it as a hold. When you look at some of the valuation metric, calculated valuation metric, it is a good company. The PE price over that, it is trading just under 10 times its earnings per share, which is really very good compared to the weighted market average. In the sector that it belongs, it is trading at 10 times its earnings. The sector it belongs to is trading at 20 and a quarter times the earnings. So it's much cheaper relatively to the sector it belongs to. And the main market is trading at about 23 times its earnings. So Wigton is very, very comparatively cheap. Right? Now, of course, Wigton is a heavy capital-intensive company, and I'm looking at their cost structure. Well, over the year, March 2021 to 2022, revenue fell off a little bit because it was in the media space that they renegotiated the kilowatt hour of electricity sold to JPS. Right? That would have impacted them. And of course, energy prices would have impacted them also. It would have impacted, even though they are renewable energy. Parts, there are still maintenance, etc. And insurance would have gone up significantly also over the time period. So that would have impacted them. Nonetheless, they are trading relatively cheap. What is interesting about them, though, let me look at some of the metrics. The PE is just under 10 times, which is cheap in the market space. Their earnings per share, the closing price was 53 cents as at just last week, Friday. Right? At book value, they're trading at 1.23, just about a quarter above their book value. This is exceptionally good when compared to their peers in the sector they belong to, which is trading nearly 5 times their book value. Right? And book value, that is the total assets minus the liabilities divided by the number of shares. So it is truly a very cheap stock right now and a fair stock to invest in. But I would say medium to long term. Reason being, one, just good things happened. We know that they are diversifying their revenue base. They have signed some agreement with 2 companies. Let me get those. They have signed an agreement with 2 companies. One, they have acquired a 21% stake in Flash Holding Limited, which is a St. Lucia registered, I suppose for tax purposes, St. Lucia registered company that has a subsidiary company in Jamaica that rent and leases electric vehicles. And they're expanding also their portfolio. So they've acquired a subsidiary 21% stake. They've also entered into a joint venture project agreement with IEC Limited, IECSPEI Limited, right, to implement green energy projects, such as a major project they are now undertaking is a $200+ million solar energy installation project at the Norman Manley International Airport. And everybody's doing that now. And this is high revenue, generates substantial costs. So that will bring in some good revenue for them. So they're diversifying their revenue stream. Most importantly, though, their main business line is the wind turbines. That is one, negotiation of rates. They just got a 21-year license issued by the government. So that again gives some level of surety that there's some continuity in the business entity. It is properly managed. Yes, seems to have a sensible team, sensible board guiding it so far. What is interesting, though, is that their revenue slightly fell off when compared to March 2021 to March 2022. Improvement in the first quarter up to June. But their cost structure is important. And I pulled on a few figures here. Now, when you look at their cost structure, just to indicate the industry it is in, which is heavily capital intensive, right? Depreciation of their total cost structure of $1.4 billion in up to financial year 2022, March 2022, right? Depreciation accounted for almost $700 million of that. Why? They're seeking to replace, they're nearly at the end of many of the lifetime of many of these equipment, and they're seeking to replace them. And they did say that earlier this year that they were looking at ways to refinance some debt, as well as they're looking for additional ways of raising capital. That's one. In addition to that, insurance cost also jumped up significantly between 2021 and 2022, which is about 201 million Jamaican dollars. Right? I remember that would have been impacted by the devaluation of the Jamaican dollar, because they really earn revenue. Yes, they earn some revenue in the US, are quoted in revenue, but a lot of their costs is in Jamaican. But these overseas costs, well, insurance certainly, reinsurance, etc., is overseas, right? So that would have contributed to their cost structure. But this company, I think, has tremendous potential for growth, particularly, the world is looking at renewable energy, particularly with this global crisis. The world is even more focused on renewable type energy. They have made some move. What I'm looking for, though, is how they're going to raise additional capital. This company has 11 billion shares outstanding. They paid a dividend last year of probably about 2 cents per, which is the return, the dividend yield is fairly attractive, Yes. And they paid, but they have not paid anything since. And that's okay. That's fine. I think they need to retain a lot of capital. When you look at their cash flow statement, it is cash flow from operations in 2022 was about $1.2 billion. That is exceptionally good. So I think the company is in good financial standing, and I think it can only grow from here. The big conditionality, though, is their ability to replace their aging infrastructure, and that is a very highly capital-intensive type effort, and it will require significant capital. So I'm looking now to see how they're going to raise additional capital, if they're going to have some new issue on the market. We know that they've refinanced some debt. Are they going to go further into debt? We'll look to see that, but there's a lot of opportunity for that company.
Very interesting there with Wigton seeing that growth, especially given the fact that we were looking to see what they would do because one of their contracts with the government ended earlier this year, right, Clive?
Yes, well, it's there. In fact, let me see if I can find it here. All their wind turbines, it has a certain contract, 10-year, 15-year, 20-year agreement. So it rolls. But interestingly, which is very creative and makes sense also, is that you have about 50-something wind turbines. You would not sign a contract where the contract is up at the same time. It doesn't make sense at all, So it's rolling. So they have no time to renegotiate. Of course, rates will have to be renegotiated. I'm not sure what is in those contracts. There was question earlier this year as to what was in these contracts. They would not disclose, and there was nothing in the prospectus when they came public to say what is the fine details of the contract between themselves and JPS. But what is of particular importance, though, is that their contract to continue to generate, the generation license it is called, was renewed by the government just since year. So they have at least another additional 20 years. This now also makes it easier for them to raise capital, whether through joint venture, through partnership, or if they're supposed to come on the market and raise additional capital. So this looks good for them.
Very, very interesting from Wigton. I remember as well, last time we spoke about them, they had acquired a stake in Flash Motors, the electric vehicle company. I see some people commenting on that. Somebody says, I think Wigton will take off very soon with EV on the horizon. And another comment coming from Elaine, who actually says EV will be slow to take off next 10 years, possibly. I don't know. Technology moves at a rapid pace these days. So what seems slow right now, things could change. You guys see Elon Musk bring out robot now? Yes. And he says it will be commercially available in 5 years at a cost of just $20,000 US, which is cheaper than a car. Yes. That's a game changer.
And Wigton is renewable. Wigton, as we know it now, are the turbines largely. But they're not limited to just turbine. As indicated, they're diversifying into different areas, all energy related, and has great potential for growth. And these are what you call new areas. There's a term for that, new areas. For example, electric vehicle, yes. Solar panel generation, of which they provided a lot of the expertise. Interestingly, also, this is a joint venture agreement. They provide a lot of the expertise as well as a good amount of the funding for this project. So they're really being quite diversified, and in their approach to finding solutions for their stakeholders. So I think there's a lot of opportunity there. And there's also a vested interest in the government and the country on a whole to really diversify our energy needs, our energy use, our energy sources, I should say. Right? Mm-hmm. And that is what? How much do we spend on energy and oil? In excess of almost $2 billion US. So, I mean, there's just too much potential opportunity for this company here. Funding is a critical area that I'm really looking to see how are they going to raise additional capital.
Yeah. Shane says Wigton has, where comment gone? Oh, here it is. Wigton has Mayberry, the Kuru brokerage house in their corner, so I expect great things from them.
Exactly. Exactly. Yeah. And Mayberry has a significant, I think they have almost 11%. Yes, through Mayberry Jamaican equity. About 10.98% shareholdership in Wigton. Yes. So they do have a vested interest, and they're a good financial house, so they know how to raise capital.
Elaine says, I sold Wigton at 97 cents. We'll take a look back at the company. Maybe it's time now to buy back at a cheaper price.
Yes.
It's even cheaper than IPO price now, because IPO price was 50 cents.
50 cents. It's not, I think it's 47. It traded at today.
Yeah.
Yes. Weighted average. Yes.
Yeah, because they've been operating in a range from what I see. 52-week range is 40 cents to 80 cents. So Alain would have done very well selling at the highs.
Exceptionally well.
Then, yeah. It could. It seems very range bound to me from what I see on the charts. Not much, just 40 to 80. Buy, sell, buy, sell. As you go through.
Roswell said, nice sale, Wilson. Nice sale, Ali. All right, good. So we just got an update from our guest, and he's still 20 minutes away. So we're gonna talk until Oliver gets here. And there's so much to talk about, though. Like, this is not even difficult for us to continue our conversation here on the Analyst. Because Keisha, over there in the US, I feel like every time you come on, I start by saying the market suffered their worst ever. Something. So here we go again. U.S. stocks suffered their worst monthly rut since March 2020. Give us what's going on this week, Keisha?
September was bad. Year to date is bad. We have the S&P down over 25% year to date. It's been a very painful year for U.S. equities, especially the tech companies. Most of them are down over 40, 50, some even 60%, like Meta, Facebook. They're down a lot this year. The key thing is that, though, the Fed in the U.S. is very aggressive on bringing prices lower. And with that, equity prices have to come lower as well. So the Fed wants all prices, grocery price, oil price, stock prices to be lower. And so we're going to be seeing more of that pressure. They've hiked by 75 basis points 3 times now. And because of that, stock market is under pressure. But the US dollar is extremely strong. It's at a multi-decade high in terms of strength. And that's a whole other issue for other countries, especially emerging markets, developing countries like ourselves. You're going to have problems there because the strong dollar is creating a lot of problems for these countries and also for the tech companies, which already are under a lot of problems because they are multinational. And so a strong US dollar really, really hurts them. Now, the thing is, we have 3 consecutive quarters of negative performance in the U.S. stock market, which, as I say, is very painful to sit and feel that in your portfolio. It's just red. I mean, a lot of my clients were just, I had a session, it was just going down red, and it's something that caused a lot of concern, but maybe there's some reprieve in Q4. We don't know. Sometimes there are indications that the Q4 could possibly be a little less painful in terms of price performance. But as long as the Fed is still planning to hike interest rates, which they will, as long as we still have geopolitical uncertainty, because we see that Russia-Ukraine war still ongoing from February to now. That is one of the longest wars on record, still going. And because of that, it's creating a lot of pressure in the Eurozone in terms of energy prices. That's still going on. We have the UK now coming up saying they're experiencing problems and fiscal problems. We have China going into election. So a lot of different tensions coming up, which, it looks pretty painful for equities going forward this quarter. However, we have midterm election in the US. Possibly we could see some reprieve as focus shifts to that, but still painful. That's what Roger said, talk about Reddit. It's been a really red year for equities. But when we think about long-term investing, maybe there are some good buying opportunities for these solid companies. If you think long-term, meaning 3+ years or more, there could be solid opportunities. But in the short term, likely more pain from here, more negative days than there will be positive days. It's just been rough, especially for Bitcoin. When you see what Bitcoin is down 68% year to date, 68%. That is no easy. You feel that depending on how you actually had invested in it, it's painful.
Yes. And we haven't even looked at the UK market. You see what happened with the pound. Pound is almost at par with the US dollar. Yes. Can you believe that? Like, I never expected that would ever happen.
Yeah, but the UK is having their own series of pressures.
Their
They came
own
out
thing.
saying tax
Right.
cuts. Their
Yes.
prime minister came out announcing tax cuts and quickly had to,
Right.
just turn around real quick and take that back
Right.
because it was not well received. There's just a lot of uncertainty going on with many countries right now. A lot happening at the same time. The US is leading the way, but I believe a lot of the moves from the US, which are aimed at containing inflation in the US, is having increasingly higher spillover effects to the rest of the world. So
Yeah.
it's interesting to see what Q4 is going to look like because it's already painful in the US, but I believe we're going to start seeing the contagion pick up.
Yes.
And that's a whole other thing.
Right. And interestingly, too, the US, the Fed just raised their base rate again by a significant amount, 75 basis points or 0.75%. The Bank of England followed suit, with a smaller 50 basis point. Of course, Jamaica, interestingly, was much, much lower, 25 basis point, you see. Now, that again would have impacted the markets, especially the equity market, and that explains why the US market is in that turmoil. In Europe, again, the ongoing conflict between Ukraine and Russia, the Nord Stream pipeline, both of them were hit by some explosion just last week. Of course, there's investigation as to who could have done it and who would have benefited from it, you see. So, and the Italian right wing, yes, which is anti-sanctions, or believe that sanctions should not be so drastic against Russia because Italy is feeling it, right? They just won election and they're not very gung-ho on the sanctions against Russia at all. So the lady's name, can't remember, but they're the right wing. But again, it's about business, the right wing. That's just like almost compare them to the American Republicans. It's about business. It's about jobs. It's about the economy. Even though politically they might be on the other side of Russia, but it's about business. And they are really opposed to it. So the Nord Stream pipeline, though, has caused further worries. Germany is one of the largest, or is the largest economy in the European Union. If they do not get oil, it is destroyed, it is damaged. They would have to shut it down completely. You see, of course, now the US has stepped in and has increased their supply of LNG, but that is at 8 times the price that they were buying it for from Russia, or well, the previous price, global market price, and significantly, according to one report I read, about 2.5 times the price that they were getting it from Russia through that Nord Stream pipeline. So there's still some level of uncertainty in Europe, and that will impact the, of course, the European market and the British financial market. And also, these markets are very fluid, much more fluid than ours. So capital move freely and easily. And then when interest rate jumps up by that much in the US, guess what? Capital is going to move there. And that has caused the British pound to depreciate even further.
Yeah, a lot going on there. So Ryan joined us late. Ryan said, I'm just joining. What is this red? Ryan, Earth are on red. Oh yeah, that's the red. The red is when companies are in the negative, losing money, bleeding. Yeah, on the stock market. That's what we were talking about, Ryan. And then big up Debt-Free Dad. Debt-Free Dad says, yeah, US stocks suck. October is generally a good month pre-midterms. Debt-Free Dad has his own YouTube channel. You guys can go check that out right here on YouTube. Twitter is in the news again. Elon Musk in the news again, and not about the robot this time. He is back in the news because of Twitter. He has resuscitated the deal. The markets have reacted, and I see Lanesra making a comment. Heard Elon Musk deciding to buy Twitter, and they've suspended trading for the stock. Keisha, you've been keeping up to date on the Twitter news, the Elon news. What's going on? What's the latest?
The saga continues. I found an interesting chart here. I'm going to share my screen on it. Very interesting. Where is it? All right, it's going to pop up the entire screen, but here. All right, so the actual timeline of the transaction. So earlier, and this is all this year, but just look at the volatility in the price of Twitter stock as the different news unfold, because most recent news is Elon Musk is saying it's back on. I want to buy Twitter for my original purchase price, which is $54.20 per share. He announced that late today. Right away, Twitter shares took off for the moon, and the exchange had to halt trading on Twitter stock because of what's happening. Twitter and all the associated options, because I know some of my clients were trying to do options on this and they couldn't because trading was restricted. But if we look over this entire period, we see that Musk came in first saying, all right, he's buying 9%. Price went up. He offers to buy Twitter. Then the board accepts. Then he's saying the deal is on hold over fake accounts. Price drops. Then he threatens to walk away. Price come down. He rips up the deal. Big tank in the price. Then Twitter starts to sue Elon Musk. Price comes back up. We've been fairly quiet until today. Most recent news. So on top of it, not only is Elon Musk saying he's back, willing to discuss the purchase of Twitter at the original price, he is saying buying Twitter is a critical move in him creating what he will call App X, which is going to be the everything app. That app will just do everything that he just says, the everything app. No specific details on what everything entails other than probably everything. But that's his latest move, and it's created a lot of volatility again in the price. So now Twitter closed today at $52 per share. Elon Musk has announced he's willing to pay $54.20. So there's only really another $2 room left in that stock pre the acquisition price if it goes through. But I mean, it's been a really volatile year for Twitter stock. On top of that, knowing the Fed is actively hiking interest rate to bring down the prices of a lot of these tech companies. And on top of that, we have this deal. So lots of volatility happening. The latest move. We don't know if this really will go through this time, but it's just been a really roller coaster year for Twitter.
These are the days of our Twitter lives.
Yes.
Our Elon lives. That guy knows how to make news. I give him that.
Yeah.
So coming back to the local scene now, Clive, I create. So usually this segment, the analyst, comes after our market recap. So you guys are going to see it right after this segment ends, the market recap, and you'll see that I create was the biggest loser for the month of September. Its stock price fell, I think, something like 40%, somewhere in that region. But you'll see the actual numbers in market recap coming up next. What is the update on iCreate? Because they had announced a rights issue. What's going on with iCreate, Clive?
Yes. Well, we have not heard any additional news. I have not seen anything on the stock exchange website as to when the actual offer will open and exactly how much. But we have an indication. We have an indication of how much. He wants to raise around 400 plus million. I think he stated about 420 million or $400 million. Yeah, that we know. Exactly what price, we're not sure as yet. There's a little speculation out there about what price. We're not too sure about that. But what we know certainly, and he has, substantiated, is that they are seeking to make an acquisition in the marketplace, and acquisition that could work out well for them. Well, we have not seen the financials of that.
This is outside of the Visual Vibe acquisition, or this?
No. That's the Visual Vibe, and I have not seen the financials of Visual Vibe. Again, it's just in the media. It has shown its total revenue base, its profit, last financial year end, and it looks good. It is multiple times what is revenue and profit of iCreate as at now, right? So, but it's a company that I've heard, speaking to a few persons in that area, technical people, they said it has a potential to generate significant revenue because it is digital advertising and where it is located, etc. Yes, it does. And it can carry a whole heap of content at the flash of what? Every 15, 30 seconds. So it can generate revenue. But they, again, just like Wigton, these uses equipment, the capital cost is significantly high. So it's just about properly managing this to replace, repair, and upgrade technology appropriately, and to ensure that the company or the business is run in such a way. As I said, Wigton has high depreciation cost, has high insurance cost. This will come with these, because this will be, outdoor advertising is subject to what? The weather, vagaries of the weather system, right? As well as vandalism, etc. That is one of the business operation. But iCreate, we have not heard anything about the opening as yet. I expect it to I'm not sure why again, strategy is different. And there's a reason why the record date was last week. The record date was the 26th last week, and the offer is not yet announced. I'm sure they know why they did that. There's a strong reason for that. It could be that other investors, wanted some sure, they kind of wanted to lock in a price, or did not want to be surprised in terms of pricing, number of amount of money being raised, maybe. But that has not yet been announced. On the technical side, we expected the price to run up. I mean, subsequent to its first and second quarter results, the price shot up probably about 200-300% since year.
Yeah.
Substantially. One, we expected a correction. That is the normal behavior of prices. When a price moves significantly in any direction, it will reverse. Why? There's always a level of over-enthusiasm in that movement. Right? And there's things that dictate that over-enthusiasm, but it is always there. And speculators coming out, etc. So we expected that. On the announcement of the rights issue, again, how the market space is the psychology of the market, they reacted again positively to it. How did the market see it? Is that capital is being raised, an acquisition will be made, therefore they're going to buy the stock. Perhaps, I believe, must be for the long term, to buy the stock and buy the price up. Must be. And speculators are in that too. And speculators do not buy to hold, they buy to exit quickly. So as soon as the price runs up, they're going to exit. And that is what we have seen.
Yeah.
So Tyrone, link up now. Let us know what's going on with the rights issue. Because after we hear that date announced, the next thing you're looking out for is, so when the rights issue are on, when is it coming out? And we haven't heard it, like Clive has mentioned. I see a lot of people in the comments talking about one-on-one IPO. Let me take a couple of those comments so you guys can weigh in if you have anything to say. So Kenton said, what's going on with one-on-one? You tell me, Kenton, what is going on with one-on-one? I haven't looked at the markets today. I do know that for September, and once again, so we're at a disadvantage because usually market recap airs before the analysts, but I can tell you what's coming in market recap. It was the second top performing stock for September, not the first, even though it was an IPO stock they listed early September. They are up still significant gains, up 65%. For the month of September. I can't tell you what it's done so far this week. So Kenton wants to know what's going on with one-on-one. And Elaine also saying one-on-one is sleeping right now and will not wake up until Q results. Yeah. And then Roswell added, one-on-one burns some people. That's what's happening. I am out for now. Wash hands. People used to the 200 and 300% quick flip. Is that's what you call a burn? 65% gain in 1 month is a burn for you, Roswell?
And just a little bit of caution. The market is opening up. The market is good. And it is real. And it makes sense, right? Think of the market first and foremost as the companies that are listed on it. These companies produce goods and services that we buy and sell and is necessary for day-to-day living. That's important, right? These companies are doing their thing. It's a serious management, a capable management, no-nonsense management. They operate on the rules and guidelines. They are running a business. The wild, speculative, playful part of it is in the market. The market is serious now. Because when you look at the financials, they buy according to the financials. But what has happened, I think, especially with social media, I think there are a lot of pundits in there talking, making statements, and then the crowd is following these without doing their fundamental analysis. I often say, when a company is coming public, the issuer is going to try to get as much money as they can from the market. Meaning, they're going to, if you put all the assets of the company is valued at $1 billion, usually one time they'll come to the market at a little bit of a discount to raise, perhaps value the company 900 to raise 900 million. Now companies realize if the company is valued at $1 billion, I can squeeze $1.2 billion out of the market. So they're coming a little bit pricier, you see? But again, the allocation is another thing. In social media, there's a lot of criticism for one-on-one on how the allocation was done. And there is substantial criticism. Mm-hmm. When Main Event came public, there was criticism. JC chimed in, as well as the FSC, with some paper that apparently is not fully fleshed out as yet. So that can help to squeeze the demand and cause this kind of burst when it comes public. But investors must be careful. An issuer has raised as much capital as he or she can by having the IPO, right? The question you must ask, the money, if they're raising 1.2 billion on a $1 billion company, why carry the price of the stock 2-3 times that amount after it's listed? Why bid up the stock 3 times its value? It came to the market at a particular value. Let's look at the financials of One and many other IPOs. But yet still, within a week or two, it is valued 4 times that value. What is going to happen? It's going to pull back. So you really have to be more measured investors, right? Either you think long-term, say you're willing to hold this thing for the long term. By then, yes, revenue, diversification, projects, acquisitions will have driven the value. Fine. But if you are thinking to come in and speculate, you're buying something at 2 to 3 times its value. Remember, there are heavy speculators in the market. They are not buying to hold. They are waiting on you to come in to buy, to dump on you. That's one. There are fundamentalists in the market who look at the financials and buy according to the financials. But when they see the stock well overvalued, way over their fundamental value, they are not going to hold that stock. They're going to say, let me dump right now because it is going to fall off and then I'll buy it back when it's low. So you retail investors, individuals, you have to exercise the same caution. You want to be in the market to make money, yes, but you have to be tempered in your approach and seek the advice of your brokers sometimes. We don't want it to get burnt, as you said, when you rush in with the herd and you end up buying the stock 200, 300, 400% higher. You'll be left holding that stock for a long while. And then what happens is not only that you're holding the stock for a long, it's okay when you hold it for a long while, but what you have done is to lock in cash that could otherwise be freed up to take advantage of new opportunities. And we have seen in the papers recently several developments that we believe more companies might be coming public. So you really need to have cash in your account. So you don't want to lock it up into a stock that is overpriced. So be cautious.
Very, very important for investors to note. So David, coming in with the news as usual, always watching the market. David said, I believe they're referring to the stock price hitting 151 today. So it gone from 165 up to last week, I believe, to now it's at 151. Yes. So one has fallen. And like you were saying, Clive, it's repositioning, it's pulling back from because of what investors have been doing with these IPOs and inflating the price in the weeks following the event. So we just heard back from our guest, Oliver McIntosh, and he says, give him 10 more minutes. Ollie, we're really holding straight for you. We're really holding for you. So you better come on and give us something good when you finally reach it. David also has an update for us saying that the circular for iCreate should be published this week or next week. Okay, you get that from Tyrone, David? Tyrone I'm assuming you must.
Get intel,
Yeah, let's take some more comments from the viewers as well. We have quite a few comments. The chat is quite lively this evening. So while we wait on Ollie to join us. So Elaine says, not buying no IPO for more than 20,000. More than 20,000 what? You mean you're not putting more than 20,000 into an IPO? I think that's what he's saying.
What that person is saying is that they are diversifying and they are containing their risk mitigation. That's good.
That's a nice way of putting it. Or they're just frustrated and saying, I am not wasting any more money putting into that. Because remember,
but the allocations are going to be low anyway.
Right. Yes. You give up that cash for a month.
Yes. And can I say something also? What is interesting? Okay. Interesting. There are several things that causes the stock price to run up significantly. Yes. One, good companies, because the reviews are good. Right? When you look at least 6 or 7 analysis I've looked at from different brokerage houses, and they all had in one in particular as a buy, and they had a price range of between $1.20 and $1.80 something cents. Fundamental, and this is fundamental, looking at the real financials of the company. Yes. So that was good. That will cause demand. One, allocation. The way it is allocated, the retail market, when they give them a small amount, then that unfilled demand is going to come back into the market once it's filled. So that causes a surge. But also, interest, technology. There's a time when you'd have to walk into a brokerage house, sit down with a rep, write up your order, and that rep passes it to the trader, and the system was a little bit archaic. That would slow down the process. So prices wouldn't run up so, and people would not be, so jump into the stock like that. So technology now online has allowed you individuals to place your orders just like that. And as soon as you place it, bam, it's filled. Right? That's one. But also the JC circuit breaker rule. That I think with a pent-up demand in a particular stock, when the stock is unable to trade for the first day or two because the circuit breaker is being triggered each time and it is unable to trade, what happened? More excess refund that was refunded from the allotment or allocation of the stock. All of that now has enough time, 2-3 days, to come back into the market. That is, it is, check cut, go into the applicant's bank account. It is now credited to the applicant's account, and then the applicant say the stock price will run up. Why? Because there's a pent-up demand. First and second day, no trade not take place, but it started off at $1, reached 138. Next day, 150 something. There's something in them to say, we won't go buy this thing because it will continue to go up. So that helps to cause this excess pent-up demand that just burst open on the third day when the calculation of the circuit breaker settles a bit, and everyone runs in, So typically, you say for the first week or so, a stock price running up, really ask yourself, look here, the IPO price is where the market, look at the analysis published by several brokerage houses and work within that framework, and any one of them, look at the range and say, okay, I'll stick to this price range and I won't go over that. And that way, you'll reduce your risk and your exposure, as well as you free up your capital for the next IPO. Or there are other opportunities in the marketplace now. Stocks are really quite cheap. And because prices are declining, dividend yield, because if there are very, very few, if there's any, except for one financial company, has reduced dividend payment. In fact, quite a few of them have stepped up the dividend payout. So the yield on a lower price is much, much better now. Additional cash flow.
So more comments on that. Roswell is pointing out that one-on-one traded as high as $2.40. The stock trade down 156 today. If someone bought up millions at 190, how is their portfolio looking?
Yes.
Yeah, Javon says, agreed, IPOs are good, but one has to do their due diligence before purchasing, as companies are more concerned with capital than giving fair value. And then Elaine chiming in, saying that the market will correct itself every time. Ryan adding, one-on-one has a lot of work to do to build up assets and profit plus revenue to gain confidence for serious shareholders to run up the share price. And then Roger, okay, we'll come to Roger's comments later. Strong Link commenting, I knew sooner or later the IPO speculative madness was cause some to get burned. Fundamentals come through eventually every time. Ravers, buy the rumor, sell the news. You may have heard this little saying before, buy the rumor, sell the news. And then O'Shane has a question for you guys. O'Shane says, let me ask you though, what if you want a quick flip for a stock? Is anything fundamentally wrong with trying to get a quick flip? Keisha, let me hear your thoughts on that.
No, there's nothing wrong. It's just when you enter into trades, you have to be clear on your purpose for that trade. What is your intention? If you are entering into an IPO for a short-term trade, be clear on that and then execute along those lines. But if you are entering for the long term, therefore you are becoming an investor in that company, that's where now the fundamentals matter, and the run up in the first 2-3 days shouldn't really matter to you because you're in it for the long term. If you are in the IPO as a short-term trade, which is very different from being a long-term investor, that's where now that short-term run up matters. And for you to be successful in that trade, you need to understand the market microstructure. You have to understand how circuit breakers work. You have to understand the supply and demand of shares for that company to be really successful in the short-term trade. I think what's happening with IPOs, some people are going in for short-term purposes, saying, hey, I want to be an investor. And then they get burnt because they don't really understand what they need to do in that first 2 to 3 day period to make their money. and they don't size the trade going into the IPO for a short-term trade. They put a lot in hopes of getting a big allocation, so that when they get the small allocation, they're now disappointed and burned, and then we have all of this descent coming into the trade. But if you are buying into a company through the IPO for the long term, you shouldn't be concerned with the short-term movements. That's the difference. But there's nothing wrong with doing a quick flip. Nothing. A lot of people do it, not only for IPOs, but for other companies as well. It's just that if you are going on fundamentals, that's a long-term investing strategy. Fundamentals do not work in the short term. They never have, they never will. Short term is a completely different trading strategy from long-term investing, where the fundamentals are really important at that point.
So Ryan says, I'm glad that people realize the stock market is not a game. Right. Knowing this, we'll have sober price trading once the company produces to boost shareholders and investors' confidence. I think what we're experiencing too is we have a lot of new retail investors, people fairly new coming into the market. And the more we have discussions like this and shows like this, the more our investors are becoming educated to what the process is like, and they're gaining the experience in the market as well. Richard says, yes, my Richard says, I love when IPO hype causes a sale on the other stocks on the market. IPOs create opportunities in the market. So Clive,
yes, that's a good point. Yeah, that's a very, very, very good point. Interestingly, can I tell you? We're in the market. We've been in the market for a while. We trade, we manage our prop accounts, and we assist the pension fund managers, etc. Yes, but there's always something new. The market sometimes adjusts. That is the things that move the market. Sometimes something new comes into the market, and you have to figure out what is it that is moving the market. And I can tell you that there's some market behavior standard we expect, but then there's a shift in the behavior, and you have to find out what is causing it. What is causing this? What is the new variable that has caused the shift in the marketplace? And I can tell you some has happened in our market. One, we know the market is just fairly new. A whole heap of new entrants have entered the market over the last 2 or 3 years, right? But what we realized, our marketing team began to follow the trend of certain discussions on the social media platform. What is being said? Who are being targeted? And we realize, and speaking to other brokers too, we realized that the social media influence was very strong. There are a lot of people on social media who are speaking directly to particular issues, and some of them are smart not to give specific instruction, but the wording pulls investors towards a particular stock, so that causes it to surge. But in so doing now, appropriately, as the gentleman just said, people sell down other securities in order to enter the IPO, and that is where a new opportunity lies. You see, so when a stock is being sold down, look at the market and you ask yourself, why is this stock going down? The fundamentals are okay. We don't see the negative adverse news in the media. Look at the newspaper, look at the stock exchange website, call the broker. What is happening? There's no bad news. But then the broker can indicate to you that we believe that people are selling it down in order to get cash to go into the IPOs. And that happens because IPOs are what? I mean, an IPO raising 400 million is getting application for 6, 7, 8 billion, 10 billion Jamaican dollars. Wow. I mean, 7, 8 years ago, that was unheard of. You see? So people are selling other securities. So there's an opportunity in those securities that are still fundamentally sound, but are being sold to get capital. So again, as he said, yes, you don't have to look at the IPO. You can look at the securities that are being sold and go into those and buy those, especially if they even have a good dividend yield. It means that at least in the short term, you can be getting some good cash flow from them. That's a good observation. Very good observation.
Thank you, Clive. So Elaine says, I cannot wait to see what will happen with the next IPO. Did we learn the fundamentals? Well, let's see, Elaine, whenever that announcement comes, we keep you up to date with the breaking money news. So I'm going to wrap the analyst segment right there. Thank you so much for joining us, Keisha. Thank you as well, Clive, always on point as usual.
Thank you for having me.
Take care. Bye.
Very good.
And for our viewers, so I'm wrapping this segment in the hopes that Oliver is ready because he's not quite on just yet. but I'm hoping that by the time we finish the market recap, you will be ready. And if not, because it's like an hour late, he's supposed to be on like 8:10 and he's not, running very, very late. So hopefully he can make it in just a few moments. But in the interim, you can take this evening's poll question, and you can take this question. You can do a poll on Twitter or on YouTube. What do you think about VertiCast Media Group buying CVM TV? Good move. CVM needs the investment. Bad move. CVM is trash. I don't watch TV anymore, so I don't really care. And then you have more competition for RJR Group or other. Leave a comment. So guys, just please give us a like on the video as well if you haven't done so just yet. It helps us with the algorithm, helps more people to become aware that this show is going on. So up next, we've got your market recap, and hopefully we will have our guest of the hour, Oliver McIntosh, on.
This segment of Taking Stock was brought to you by Bulwark Insurance Agency, Insurance Made Easy. Time now for your market recap. The JC Combined Index gained more than 6,000 points, or nearly 2% last week. 127 stocks traded across the main and junior markets for the week, ending Friday, September 30, 2022. 75 advanced, 40 declined, and 12 stayed the same. 531 million shares changed hands on the Jamaican dollar market, valued at $4 billion. Sagicor Real Estate X Fund was last week's most traded stock, taking up 35% of market volume. People bought and sold 190 million shares in the company. The stock gained 1 cent to open this week at $8.24. JMMB 7.25% VRJMD preference shares traded the second highest volume, with people buying and selling 175 million shares. The stock opened this week at $1.93. And the Trans-Jamaican Highway rounded out last week's most traded. The stock took up 5% of market volume with 27 million shares trading. The stock's price was unchanged to open the new week at $1.47. Now let's see who had the biggest gains for the week. 138 Student Living Variable Preference was last week's biggest gainer. The stock rose 38% to open the week at $69. The stock was also the third biggest gainer in September, up 53%. It gained $24 to open October at $69. First Rock Real Estate Investments USD was last week's second biggest gainer, up 36%, to open this week at 7 cents US. The stock was also September's biggest gainer, up 70%. And rounding out last week's biggest gains was JMMB Group 7.25%. The stock was up almost 20% to open Monday at $2.63. On the losing side now, Margaritaville Turks was the week's biggest loser, down almost 16% to open Monday at $22.34. Cargo Handlers was the second biggest loser. The stock lost $2.15 to open this week at $11.55. And rounding out last week's biggest losers was ISP Finance Services. The stock was down 15% to close last week at $19.18. Now here's a look at some of the highlights for the month of September. The main index gained less than 1%. The junior market gained 1.5%. The financial index was up almost 3%, and the manufacturing and distribution index was up almost 2%. 1-on-1 finished its first month on the stock exchange as the second biggest gainer. The stock was up 65% from its IPO price to close September at $1.65. On the losing side, iCreate was last month's biggest loser, down 43%. The stock opened the new month at $2.40. Cygnus Credit Investments USD ordinary shares was September's second biggest loser. The stock lost 24% to open October at 10 cents US. And rounding out the month's biggest losers was Everything Fresh. The stock fell 21% to open October at $1.56. Over on the Trinidad and Tobago Stock Exchange, the composite index lost 15 points last week. NCB Financial Group was the most traded stock. It opened this week at $4.50 TTE. The stock was also the week's biggest loser, down almost 9%. Massey Holdings was the market's biggest gainer, up 1% to open this week at $4.71 TTE. Meanwhile, it was another rough week in the U.S. as the Dow Jones fell almost 4%, and the S&P 500 and Nasdaq dropped more than 4%. At the pumps, motorists got some reprieve last week as gas and diesel prices all fell by $4.50. Overall, the price of 87 fell $8.50 for the month of September, from $201.66 to $193.16. 90 also fell $8.50 for the month, from $205.63 to $197.13. Meanwhile, regular diesel prices fell $18 for the month, from $238.26 to $220.26. Ultra-low sulfur diesel also fell $18 from $245.24 to $227.24. In foreign exchange, it took an average $152.82 Jamaican to purchase $1 last Friday. That's 13 cents more than a week before. Meanwhile, it took $168.14 Jamaican to purchase £1 last Friday. And it took $149.90 Jamaican to purchase €1 last Friday. Overall, the Jamaican dollar weakened for the month of September, losing $1.02 to close the month at $152.82 for $1. And on the crypto markets, Bitcoin fell a slight 1% in 5 days. The cryptocurrency was trading at $19,202 on Monday. Bitcoin fell 3% for the month of September. Ethereum dropped almost 3% in the past 5 days. The cryptocurrency was trading at $1,300 on Monday. Overall, it fell 16% for the month of September. This segment of Taking Stock, The Analysts, is brought to you by JMMB Group, your best interest at heart. Disclaimer: this is not intended as
Well, it was not. Let's use the past tense. That segment was not intended as financial advice. Please consult your licensed financial advisor before making any investment decisions. Now, this would have been our final segment, the analyst, but as I told you before, we were flipping the script. I don't know if we're going to get Oliver on. I'm just going to read some of your final comments. And if he comes on in these next 5 minutes, then we'll do the interview. If not, then we are just going to wrap the show. The last we heard from him was about 15 minutes ago and haven't heard anything from him since. So let's see what happens in the next 5 minutes. In the interim, I'm just going to take some of your comments here. So Ryan says, I tried to do, Ryan. All right. Ryan is trying to do the poll. Kristen, check the link. Check the link in the description. Is that where you are clicking from, Ryan? He says the link is giving him something else. So I don't know. We probably might have pasted the wrong link in the description there. Let me take some more of your comments on various things, by the way. So Elaine says, RJR has not lived up to expectations. Why is that, Elaine? How? In what way has RGR not lived up to your expectations? Lanesra says CVM Live is now on YouTube. Is it broadcasting live, like streaming live on YouTube, or they post it online afterwards? But yeah, YouTube is where it's at right now. Everybody is putting their content online on various streaming services. We had a question for Ollie. He wants to know if the sporting offerings on C Sport TV will be carried on CVM. What's C Sport TV? Is that part of VertiCast? I don't know. So he wants to know if those offerings will be carried on CVM TV, example, the English Premier League. Roger was asking about Fosrich's rights issue. If you recall, about a month ago, Cecil Foster from Fosrich was on this program on Taking Stock, and he announced that they will be doing a rights issue very soon. I think he said September. We're now in October. So he says, what about Fosrich? Didn't they say they were going to do a rights issue as well? It seems there's no follow-up with these companies going about providing information about these issues. But just bear in mind, Roger, that these things have to go through various levels of regulation. So they have to be approved by the FSC. And sometimes that takes a lot longer than companies initially anticipate. So you might hear announcements being made because people are, eager for whatever it is to happen. And then they encounter some type of regulatory hurdle, and it takes a little bit longer than they expected initially. So if he said it, I believe him. It was approved by their shareholders, and it's just for us to be patient and wait on the official announcement as to when that will actually open. So you have a few more comments here. Lanesra pointing out that Kim Kardashian was charged $1.2 million US dollars for promoting crypto without announcing that she was being paid to do so. That was some interesting news. I think yesterday that news came out. You want to know what Kim Kardashian has to do with crypto, right? Well, she's a very, very successful businesswoman. And these things, it's interesting that, Kim has to pay this big fine. And I would feel like Elon Musk is somebody who the regulators should be after, because he is always playing with the markets, not just with this whole Twitter thing, but look what he did with Dogecoin, running that up. Look what he did with Bitcoin as well, announcing that Tesla is going to be accepting Bitcoin. I feel like he plays with the market quite a bit and plays with and it's not entirely his fault, because people take what he says and they run with it because they respect his status as obviously the world's richest man. But he should also know that what he says, the things he says and the things he tweets, have tremendous influence and impact. Even me, I'm just, here in Jamaica doing a little stock show, and things I say online have impact on the market, and I have to be aware of that. And I'm nowhere even remotely near the level that Elon Musk is. So it's interesting that now we're seeing Kim Kardashian being charged over $1 million US for promoting a cryptocurrency, and the reason that she was charged, that she didn't announce that she was paid to do so. And the difference between her and Elon Musk is that he, at least as far as we know, hasn't been paid to promote any of these things. But do they redound to his ultimate interest? I think so. I think yes. Has he benefited from the market movements? Maybe that's something for the feds to investigate, or whoever does the investigations over there in the United States. Lavar says, Kalila, we need an advanced master class for the young investors and persons already in the market. I think we need to start teaching the fundamentals and not the quick flip. Well, I told you, let me not say anything else. Something's coming. Something's cooking. Something's cooking, Lavar. Okay? We're working on something. And let me see, I have a comment here. Okay. The link is now working, guys. The link for the poll is now working. So you can go back and take the poll question right now. Strong link says, in the short term, quick flip investing, you are running with the sharks. This is dangerous if you are a minnow. All right, strong link. Elaine is coming with the shade this evening. Elaine says, what is CVM? Asking for my parents. No. Why did you do that? And as soon as you say that, look who joins us. Oliver McIntosh is on. Ollie, you surely kept us waiting, man. You know how to keep us waiting.
Boy, Khalil, let me tell you something. It's only because of you, Only because you that will rush and drive off a mountain top to make sure that I can come and talk to you. What are you doing?
You were in the country.
Still am. We as we started to integrate CVM into the VertiCast business, we immediately have endeavored to tour all of the CVM sites. So some of the first comments, and I heard some of the comments earlier in the show, talking about the coverage and the reach of CVM. So a couple of directors and myself, the lead engineers, have been on the road since about 6 a.m. today, visiting all of the CVM towers. And we have a set more to do tomorrow, because we have committed that we will improve the quality of the CVM broadcast and the reach of the CVM broadcast immediately. So I've been in some places, Khalila, that I didn't know existed.
I'm sure those towers are in some real remote places. I hope you had a solid vehicle.
Well, let me just say that I do have a van, and I discovered tonight that the van actually has certain features to go up some of those hills. So the steep precipice off of some of them was quite frightening, but in any event, it's been a good learning experience for us.
All right, good. All right, so give us an update from the last time you were on the show. That was in March when you were just really launching and announcing VertiCast. And since then, you've had English Premier League announcements, you've had the big announcement, CVM last week. So give us an update as to what all you've been up to in these past 6-7 months.
So as you've seen, we've been quite busy. So you know, after starting the company and acquiring the rights for the Premier League and the World Cup and NFL, we started our broadcast. So we started our subscription throughout the region in August, and started broadcasting on cable across the region as well. So we have cable operators in almost 20 countries, and we have subscribers that are subscribing from across the region, from English speaking Caribbean to Spanish speaking Caribbean to the French speaking Caribbean. So we've been very busy with that and putting together our programming, as well as what was announced last week, Monday, which is the acquisition of CVM. So I don't think there are going to be a lot of very sleepful nights in the next year or so while we get all this up and running.
I'm sure starting a whole new venture, no? So what's your subscribership like now, and what are the fees for subscribing to VertiCast in the
So
model
paid
in the
access
pre-CVM
starts
model?
right. So our paid access for the C Sport channels started um, uh, last week, and it's measly $7 per month um, for access to the channels. You could buy a yearly package for 70.99, and we also are going to be partnering with a couple of local payment providers where we'll be offering a weekend pass that you can purchase from one of the from two of the payment providers to start with, and then we'll be rolling that out across the region.
Ah, okay. So how many subscribers you have now?
I can't tell you that, but let's just say that we've been very pleasantly surprised with the numbers that we've been able to get. Um, we actually surpassed what we had targeted, and I think that the popularity of the content, the quality of the broadcast, and the ease of which people can access it has really helped to increase the numbers. So we are pleasantly surprised by the take up.
All right, so let me just jump to the question that everybody wants to know.
Uh-oh.
Christopher is asking it. Will CVM or CVM Plus show the Premier League?
You just want me to announce something here on Talking with Khalida. That's what you want me to do. Um,
That's what
um,
everybody wants to know from the rumors started swirling that the acquisition was coming.
so the first thing is CVM will not become CVM Sports, right? CVM will remain a variety channel. That being said, it doesn't take a actuarial scientist to put two and two together. If VertiCast owns the Premier League rights and VertiCast now has now owns CVM, that the two will come together at some point. As to when that is, we're still trying to figure that out. As you can imagine, Kalila, you having worked within the media space and at CVM and other places, it takes some time for assessment and evaluation to understand the programming and understand the approach and marry that with our own vision. So in coming weeks, we will figure that out, and then we will make an announcement as to what the initial programming changes are, which could include the Premier League and likely will. And then we'll also add other content as well.
So I have two differing views from our viewers. So
Sure.
Christopher says, I'm a subscriber to VertiCast, currently living in Antigua and Barbuda. The quality is first class. And then Tiwi says, are you aware of the constant buffering on C Sport platform? This is a turnoff for subscribing. So C Sport is a part of VertiCast?
That's correct. Yes. So we have C Sport and we have C Sport 2, we have C Sport Plus, we have C Sport Extra. And what I would say to Tiwi is, we have invested significantly in our technology. to broadcast. I would say that we've had very few comments about the strength of our signal. And if there is buffering, it likely is on the end of the broadband provider and not necessarily on our end. Because if it was on our end, then you would see a lot of complaints about it. And we really haven't seen that complaint coming from most of our subscribers.
So Tiwi, you need to up your internet plan. Unknown Prince says, any plans to increase C Sports content portfolio in the future? F1 racing, for example.
Unknown Prince, for sure, we're going to expand our content portfolio. We're looking at different things. We're just getting started. We literally are. Today is October 4th, so we're actually 2 months into our broadcast life cycle. So yes, we'll be looking at other things. Racing is definitely one, whether it's Formula One or something else. We're definitely going to be looking at that because we know that's a passion around the region. But yeah, we'll be rounding out our content portfolio in the coming future.
Okay, so far you have C Sport and C Sport 2, that's part of the group, and of course CVM, which would be the new entrant.
That's correct. So C Sport and C Sport 2 are broadcast on most cable operators, right, around the region. We're still expanding that horizon. So we just recently signed cable operators in the Dutch Antilles, and we continue to expand. So we have as I said, about almost 20 countries now with cable operators, as well as our subscriber offering for the channels.
Okay, so those are actually on cable, so you can access them both on cable and in a digital format.
That's correct. Not on all cable, but on most cable.
For the one subscription, so the $7 change gets you access on cable and like on your phone.
Well, no. So the $7 gets you access via our app, which is the C Sport app, which is available via the Google Play Store as well as in the App Store. On cable, it's available via the sports subscription packages that the cable operators offer regionally. So whether you're in Cayman on Logic, or you're in Bermuda on Tele Bermuda, or you're in Trinidad on Amplia, or you're in Barbados on MCTV, you can access it via the cable operator, which will typically offer via their sports package.
So I'm just getting to the viewers' questions since we've been waiting for quite some time.
No, I apologize to the viewers.
Yeah, so David has another question as well. David wants to know any updates on working out a deal with Flow, Columbus Communications across the region to bring the EPL on TV.
Look, we've had some dialogue with Flow. We at the end of the day, what we're aiming to do is ensure that the consumer gets access to the content. So we have been in discussions. We are trying to get to an agreement with Flow Columbus Communications. Well, it's Flow Cable and Wireless, we're hoping that in the coming weeks or in the coming months, we will be able to do that, so that at the end of the day, it's not about VertiCast, it's not about C Sport, and it's not about Flow. It's about what the end user and what the consumer wants. And we have, I think, put something on the table that is beneficial to all of the stakeholders. That will be us, the cable operator, and to the consumer. So, answer the question is yes, we are in dialogue, and we're hoping that we will be able to provide the channels to all consumers, not just some of the cable subscribers, but all cable subscribers in the coming months.
All right. So what else do you have the rights to? You also have FIFA World Cup Qatar 2022 this year.
Yes. So we are, today's what, October 4th. So we're about 6 weeks away from the first match in Qatar. Very excited about it. We have an exciting plan that we'll announce shortly. So we'll be broadcasting on our digital channels. We'll be broadcasting over the air. We'll be broadcasting on cable. We have partners that will be broadcasting the World Cup. For example, in Trinidad, we have Guardian Media that we have a partnership with. In Barbados with CBC, Antigua ABS, in Bermuda, in Cayman, in all over the Caribbean, in Haiti, in Dominican Republic with Multimedias del Caribe. So we're very excited about what we are doing with the
I
World
don't
Cup.
hear you mention CVM. Is that one coming on CVM?
You know, Kalila, you just want us bust everything. You know, you just want everything to
But
bust
that's
for
my
yourself.
job. That's my job. That's why you hired me years ago.
Absolutely, and one of the best hires I ever made. But yes, again, you put 2 and 2 together, right? VertiCast owns the rights for the World Cup. We now own CVM. Now, how we will actually program that and broadcast it, and the complementary programming that we will bring. I think you know that my experience is that we like to do things with a wow. So when we come to the market, you can best believe that we're going to come with a big wow.
Okay, because that's coming very soon. Those dates are coming up, so we look out to hear them. But moving back to the whole CVM deal, how long was this in the making?
So, you know, we had this preliminary discussions much earlier this year, and you know, we've been kind of going back and forth, and we had a meeting of the minds a couple of months ago, and then you had to go through the typical transaction process, right? Due diligence, getting the agreements in place, letting the lawyers kind of have their field day at it. And then us just coming together from a business standpoint and closing the transactions. Like with all transactions, there were some obstacles, and we overcame them together with AIC Barbados. So I think that, you know, it didn't take a long time to get together. It took a bit longer to close it. But now that we're here, you know, we've been at the helm now for the last 5 days, and what I will tell you, Khalil, and you were there once upon a time. What I will tell you is that we understand the perception of CVM in the market. Having spent the last essentially week meeting with the team and seeing what they do on a day-to-day basis, seeing that the resources that they have to do what they need to do on a day-to-day basis, there are some extremely talented, extremely committed, and extremely passionate people who work at CVM. We think that, you know, us coming in as a group and providing resources, providing content, providing a vision, and providing some leadership is really going to make CVM into something that's never been seen before in the market. And we're excited about it. And I think the entire CVM staff is excited about it.
So what was the acquisition cost?
You know, you have a list of things that you just want to bust on the show, right? You're just checking them off one by one. All right, we're going to get this and we're going to get that.
The people want to know.
I could tell you, but then you know the old cliche saying, right? I could tell you, but then I'm going to have to, and I don't want to do that. I love your show, and we all love you, so we don't want to take you out. Look,
give us a range. Give us a range.
It was greater than 0 for sure. It was definitely greater than 0, and less than Elon Musk is paying for Twitter. So there's your range. How's that?
All right. Well, you can't say I never asked. The viewers want to know, so I will ask the questions. Let's take a couple more questions from the viewers. And one
absolutely.
To the point that you were just making about the perception of CVM out there. So Prince says, people have long complained about the staleness of the content on free-to-air television. What are your plans for CVM in terms of brand new and refreshing local content?
So, you know, a couple of things here. So, firstly, as I said, for the last week, we've been spending a lot of time with the team at CVM. And just in the last week, the ideas that a number of them have that haven't been brought to the fore and to broadcast on CVM is amazing. It's really, really amazing. So they alone have their own ideas. Secondly, I've spent a lot of time meeting with some of the artisans and some of the producers in the market who have their own content that they want to bring on here. And I think it's quite unfortunate that Jamaica has this dynamism when it comes to content and production that's seen worldwide, but for some reason has never really found its way here in our local market. And what we're going to do is provide that platform for these artisans and the producers and the creatives in various formats. So whether it's talk shows, game shows, plays, serials, heavy hitting programming, light programming, kids programming, obviously sports. We think in the next couple of months, people are really going to be very happy that they'll now have an option for additional content. And to your viewer who raised a question, I agree that we at CVM the content has not been as exciting as it probably could have been. And what we've agreed with the team at CVM is that the content that we're going to bring on here is not going to be about competing with the local broadcasters, right? It's going to be about providing entertainment that if you're home and you have your remote in your hand and you're going from NBC to CBS to E Network to ESPN to C Sport and then back to CVM, the transmission quality will be international standard and the content will be international standard. So, we're going to provide entertaining content across the board, across genres, across different types of programming that I think that the market will be very happy about when they hear about it. I've been having meetings over the last couple of days with some producers, and we've almost agreed on some of the content. So stale will not be something that you'll associate with CVM in the future.
It's interesting that you've even gone this route to acquire a traditional media station, because the trend seems to be going in the opposite direction. Traditional media are trying to get into digital media and set up streaming platforms and so on. So all the NBC has Peacock TV, HBO has HBO Max online. Why did you think it was still important to acquire a traditional media free-to-air television platform?
So interestingly, you're right that the trend has been to go towards digital media, right? But if you'd have noticed that a bit of a reversal of that trend over the last couple of years has been that those that really dove into it and spent a lot of money internationally have kind of backed away and refocused, looked at different ways of trying to do digital media, because the issue with digital media right now is how do I actually make money off of it and make it sustainable, right? And I think in that same time period, you've actually seen a lot of the traditional channels, whether it's internationally or in the region, that have actually done pretty well in this time frame. So for us, it was, okay, we know that digital media is in the future, but where we are today, most eyes are on cable and over-the-air television. Most ears are plugged into radio. It's going to get there at some point. The question is when, right? So the Verti in VertiCast comes from vertically integrating these platforms where we take advantage of what is the most used platforms today and develop that to where people are migrating to. So whether it's, persons in my family or my friends, everyone has the apps on their phone. Everyone, has Netflix and so forth, but you turn to certain channels for certain content, whether it's news, morning shows, for sports, for kids television. Our big box television is still very important. And so are the apps. So the question becomes, do you go in one direction or another? The point, the vision of VertiCast is, well, let's bring the two together and take advantage of the opportunity that both creates. We're going to take advantage of what over the air offers, and then also make sure that we offer that content on digital media for those that have migrated to that platform already. So I don't think it's one or the other at this stage. And you'll see that, as you mentioned, NBC and Peacock. What they're doing is balancing their program between Peacock and NBC. You see that with ABC, ESPN, and their Disney Plus service. And you'll see that with VertiCast, with our C Sport and our C Sport on cable, C Sport on digital media, and with CVM, and then our other partnerships, which are also will be developed over the coming months.
Yeah, because your competitor RGR has all their content on One Spot Media. So are you going to be doing the same for CVM? Something similar?
We're not sure exactly how we're going to do that. We're working through that right now, the strategy. And what RGR has done has, I think, worked out very well for them. And I think it was very smart on them to do that. And again, you see the likes of Disney and Peacock doing the same thing. So yeah, I think we'll head in the same direction. The question is, how will we do it? I don't think we'll do it in the exact same way. Well, I know we won't do it in the exact same way, but that's definitely the way that most media entities are looking at it now. How do I marry the two and offer our consumers, at the end of the day, who are the most important person in this whole equation? How do we offer the consumers content when they want it, how they want it, and we deliver that.
Yeah, this is definitely a very interesting space. Like, I had only been holding on to my cable subscription specifically for local news, local content, yes, but mostly for local news. And then I realized that they have it on One Spot Media, and the news is actually free. They have other premium content that you have to pay for, but the evening news is a free product on One Spot Media. Free plug for RGR's app. And so now I feel like I don't even really necessarily need cable anymore, because everything is available to me on demand on my phone, whether it's a paid for service or a free service like us here on YouTube. But before we go, Ollie, I'm going to ask you one more big question. I know you said we've been asking big questions all evening, but this is another one
Is taking stock coming to CVM? Is that what you're going to ask me? Is that what you're asking me?
That's not the question. That is not the question. So the question comes from Lanestra, who says, VertiCast needs to list on the stock exchange. Well, I'm not even going to ask her part of the question yet. I'm going to ask the question this way. Does VertiCast have any plans to do an initial public offer?
Yeah, we will evaluate that when the time is right. We're just now getting started. We're getting our feet wet. We are integrating CVM into the VertiCast group right now. We have a lot of work to do to meet the expectations that's been set by this acquisition. We have a lot of work to do with C Sport and C Sport 2. We have an incredible amount of content that we have to deliver over the next couple of months. And our expectation is that once we prove the model and we execute as we know we can and we commit to, then we'll look at what the options are. The public market in Jamaica is very active and has been very active, and there are a number of players in the market who we have spoken to and said, look, the time might be now, while it's kind of very positive and you should go. And I think the view from our team is let's prove ourselves in terms of what we can do. Let's bring in the other content programming and other partnerships that we're looking at, and then decide in after 18 or so months to look at what the right way to monetize the business is.
And let me ask Lanesra as part of the question now. Are you looking for more acquisitions?
I don't know if we're looking for more acquisitions. Trust me, this one is...
This was a big one, huh?
This was a big one already. So, what we're looking to do is, as I said, to integrate and prove this out. We are having discussions with others about partnerships. So we're looking into different markets. We're looking to expand our base across English, Spanish, French, and the Dutch-speaking region. So I wouldn't say that we're looking at other acquisitions, but I would say that we are definitely in dialogue about partnerships with the region. And if those happen to turn in acquisitions, then we'll definitely look at that. But as of now, it's focusing in on proving what we have and executing on what we have.
Well, I want to thank you for joining us, Ollie. I know you're tired. Hush.
No, let me take Kalila.
Tomorrow.
So today we went to Huntley in Manchester. We went up into Westmoreland. We went up into Hanover. Tomorrow we're doing Mobay. We're doing St. Anne, St. Mary, Portland, St. Thomas.
Wow.
So, it's not enough for us to hear or get reports on what our assets are, how our assets are performing. We are traveling. We not only go to the towers, we bring our TV, put up the antenna, see what the signal looks like, so that we can make the necessary changes and come back in a couple of weeks and test it again to make sure that we make good on our promise that the signal coming from CVM will be of an international standard very shortly.
Well, we will definitely be staying tuned and looking out for those changes. Thanks again, Ollie. Get some rest.
Thanks, Kalila. Thanks for having me on. Look forward to talking.
We'll take a quick break and come back with the final segment of our show. Or not. Is this the final segment of the show? All right, let me just take one last comment here. And this comment came from Bad Mali, who said FTA, meaning free to air, will always be king. Ad spend will always be the driver. And right now, the platform with the most reach is still free to air radio and TV. All right, so that's our show for this week. Thank you so much for watching. If you haven't liked the video just yet, make sure to hit that like button, subscribe to the channel, and share with a friend. Also subscribe to the newsletter, guys. KalilaReynolds.com/newsletter, reminding you that email subscribers get a copy of my free broker guide. And turn on those post notifications so that you can be the first to see all the other features when they hit the channel. We want to help people learn more about money so we can all get this money together. Follow me on Instagram, Twitter, and TikTok at Kalila Ray, and follow at KRM_business news on Instagram. If you want to connect with the analysts this week, check the description box below for their contact information, and also visit our website at KalilaReynolds.com for financial information you can use however you like it, watch, listen, or read. Now tell a friend about taking stock, because investing is the new sexy. So let's make it cool to talk about money. I'm Kalila Reynolds. See you next time.
Let's get this money.